Hey guys, Mike here. So, oh boy, what a day in the market. Oh my goodness, man. I should say what a day in the market after 2 o'clock. I mean, man, boy, you talking about shorts getting squeezed and you could just hear them screaming for mercy. And of course, what are they doing? They were covering. They had to because that's why when you see a rally like that, like 2 hours straight, and it's pushing things up. And I'm going to show you what got pushed up. Again, this is what we've been talking about for weeks now is this rotation, because if you're just looking at the numbers, you're probably thinking, man, I bet you the Mag 7, ooh, I bet you it was lighting it up. Oh, no, sir. Wasn't them at all, right? I'm going to show you that. I'll show you exactly what was going up, right? And that's what we've been talking about, this rotation setting up, okay? And, the big thing wasn't the pause. I think we all knew that, didn't we? We've been talking about it for a long time. But it's what the Fed president's put in the dot plot. That's the key. So we're going to talk about that, and I'm going to show it to you. And I think it surprised everybody. It surprised me. I'm not gonna lie about it. I think everybody was taken off guard with what they put in that dot plot, and that's why everything just went to the moon, right? And I listened to Jerome Powell again. Never listen to that man speak. You'll waste 20, 30 minutes of your life you'll never get back. But he didn't even try to quell it. Honestly, he didn't try it at all. And so there was no bearishness in that man's voice at all. And I'll tell you what, it's coming at the perfect time. I can tell you who's probably happy more than anybody else right now about what's going to happen next year is got to be the Treasury and the government. Okay, and I'll show you why on that one, and then we'll go into what exactly. Remember we talked about yesterday's video, how hedge fund managers are behind. They're just piling in, man, and piling in and piling in. The real question is, going forward is like tomorrow and going into the end of the year, how much FOMO takes place, if any, right? That's really the key here because, people like to pile on because there's a lot of people still sitting in cash right now. And so, we'll look at that as well as, Tesla. I'm going to show you exactly what happened to Tesla today. It was crazy. But here's what the Fed had to say, okay? So they paused. No shock there. The key was the cuts. They're actually penciling in 3 to 4 cuts. And, 5 officials actually are penciling in basically 4 cuts of 100 basis, 100 basis points total, right? Here's the dot plot. Here's how we know this. This is what they put out. At the bottom to the left is 2023. There's 2024. What do you see? No official is putting in another hike, and look at all those different cuts, right? And so that's why the market just absolutely went parabolic. And you can see it. That's why we talk about HYG in here. Boom. It just started mooning up. And of course, really, to me, the reason why smart money was on board with this rally before anybody else is because they were sniffing out what the Fed was doing, right? This is what they do for a living. And if you just look right here, what the 10-year yield do? Massive. And remember, it's the big moves. That's where you get these parabolic moves. Because such a big move down today, and what saved it from going down any farther? The 200. And just look how much it's down since we talked about this last time. We've been talking about it for weeks, but there's that massive move down, right? And so, again, I want to see what happens when it hits this trend line that goes back over a year. That's what I want to see. If it does get a bounce, because these things nothing goes straight down, right? You get bounces here or there. The 30-year, what happened? 200 saved it from dropping any farther. We'll see if it gets a slight bounce or whatever. But again, we've seen it before where we're talking about how, wasn't it strange? Yields were sometimes green and the market was green. Yields are red, the market was red. And the yields were like having nothing to do with anything anymore. Now, I think this is what HYG or, smart investors were talking about. And you look at the dollar. Ugh, look at that. That thing just fell off a cliff. So right off the bat, semiconductors, loved it, right? They loved this, but then, high risk stuff, loved it as well. And I'll tell you why I say the Treasury's happy and the government's happy, because when you just look at what's coming up for them, 31% of U.S. government debt outstanding, about 7.6 trillion, will mature over the next year. And you just go through this chart right here, and you can see what kind of debt we're talking about that's going to be maturing, but that is a boatload of debt to be maturing, right? And why is it important for them to start cutting rates and yields to be coming down, all that stuff next year? Because you can see the government expenditures on interest payments, that looks like a GameStop chart or some of these meme stock charts, right? Just going to almost $1 trillion now, just in interest payments alone. And yes, you have to pay the debt. Americans don't own all the debt, okay? And you have to get people to buy the debt. And so this was key to me. I know they're like, thank God that the Fed is going to end up cutting and yields are coming down, right? And so we'll watch bond auctions and all that stuff to see what happens. And if you don't think that's bad enough, look at this one. This is the interest payments per day have doubled from $1 billion per day before the pandemic to almost $2 billion per day in 2023. As you can see, as they started raising the Fed funds and yields started going up, that's interest payments. Okay, we still have to manage and actually take care of the debt. It is a thing, and so this will help out with that next year. And why is it important? Because right now, I don't think it's going to happen again, but it says Treasury auction sizes will be on average 23% higher than in 2023. And that's what's been giving us problems, right? Is the supply of bonds out there. In October, the U.S. sold $20 billion in 30-year bonds, but dealers had to take up 18% of the supply, more than the typical share of about 11%. This happened again, this was the other day, when dealers buying up 17%. And what I'm really curious about here is, and guys, before we continue, please hit that like button down there in the bottom. Give me a thumbs up. Help people find the video and stuff. And I really appreciate all your support. And think about subscribing if you like the content. Is how all that extra supply, if that comes to fruition, like how that's really going to affect the bond market. And at some point next year, does the Fed continue to roll off the balance sheet? Are they going to step in and start being a buyer of bonds again? Like that's what I'm really curious to see right there. Because they said today they're going to continue to roll off that balance sheet. So again, we'll see, because somebody has to buy all these bonds, and with them putting out so much more now, people got to step in. And so I'm curious to see that. Let me know if you got any thoughts of that in the comments. Now, this is the key, and this is why I update you all the time on this. Look at what was green today. Look at RSP. That is the equal weighted SPY. Look how much higher it is, one, than the SPY and even the QQQ, but it also outdid QQEW, right? So that lets you know all those stocks out there that sits on the SPY. It wasn't, again, the Mag 7. Look at the Mag 7. Look at this. Google, barely green. This is the end of the day. Microsoft is red. I was like, Microsoft is red. They even got a price upgrade. Apple hit all-time new highs. Meta, barely green. Netflix hitting the Mag 7, but I put it in there anyway. Good day. Amazon, about 1%. AMD is not Mag 7, but I put it in anyway. 0.43. Tesla was red almost the majority of the day and finally ended green, and NVIDIA barely up, right? And so you can see what was green. All these other stocks, right? Especially when you start getting the biotech, anything high beta, even the travel was just absolutely booming. So like, it's going to be a soft landing, right? You know, it don't matter what it was, FedEx, UPS. I knew silver and gold was going to be up for sure as soon as the dollar tanks. And so your metals should be up. Your grocery stores are up. High beta stuff, like anything to do with art, definitely going to be up. I mean, just look at all that green right there. And so again, I mean, you keep scrolling down. This is the breadth spanning out, right? And again, Chinese stocks, I mean, they're a mess anyway. But you know, look at, I mean, even nickel. You know, it's kind of day it was. You see, nickel is up 12%. But look at the fintechs. Whew, fintechs just booming today, right? Semiconductors, and what's really good again, pay attention to it. Nvidia barely up compared to what it normally is, and then look what the other semiconductors were doing though, right? And so it's separating itself. And there's the Dow, new all-time high right there. And we said it'd be the first. It was the first, right? And transportations were up. Everything on those Dow stocks booming, right? And so we'll see how high it can go. I expect a retest. Again, things don't go straight up. You want stair steps, even though it looks like it's going straight up, right? IWM, this is another one, right? IWM, people rotating in those small caps, finally broke through that all-time high anchor VWAP, which had been a brick wall, and 2 o'clock hit, and you see it just mooned, right? Hit into another resistance area right there. If we pull out, you can pretty much see your resistance straight up, and then you know where it's going to be going to. So yeah, the area of resistance where we're at now, if it can break above that, even though honestly I would hope it would take a break here, but it probably won't. But you know, pull back, get some support, and then move back up. But again, it's going to fill another RTH gap, which like it did today. And then the big one though, if this thing can at least get to like 194 and get above that, then man, you see that big volume gap? Like that would be huge for this. Is that going to happen in the next 2-3 weeks? That's what we got to find out, because usually mid-January into February, those are usually a weak time for the market, okay? And so again, it's getting in overbought territory, all this stuff, but you got some nice support down below right there, because now it's actually above that descending trend line for the first time in quite a while. And so if it can sit there and come down, maybe bounce off those 2 trend lines, get some support, be great. Now Tesla, let me tell you something. There was big boys shorting Tesla today, okay? Because this right, you rarely see this much news coming out about one company, but it was hitting like every hour on the hour. And especially once it finally started to sell down, all you saw, I recorded this way early. Like, this is when the weakness started, and you just see it coming out one after the other. Tesla recall highlights. Swedish people want to join the strike against them and stuff like that. And what's crazy is you kept seeing them post the same article from a different network, like over and over. Like, that's what was crazy about it. So I knew, I was like, oh yeah, the big boys are absolutely trying to push this down. And it would have went to 225, I believe, it wasn't a Fed day. Honestly, they started to recover, but then when 2 o'clock hit, skyrocketed back up, right? Took out prior day's high. That's a liquidity grab, came back down, ended higher than prior day's high. But yeah, this is when whales want to sit there and short, these hedge funds or whoever it is, that's what they do. They use that news to push it down. They'll keep posting the same 3 articles from different networks and stuff to keep shoving this thing down. That's exactly what happened, right? And then when it started breaking that key area between 231, 233, it's like, oh boy, here we go. But, you know, and again, not saying it can't keep selling down at all, but this one right here, I mean, that was a straight manipulation. There's no doubt in my mind about it, because what it was talking about was Sweden and the car recall, which from my understanding is the software thing. You know, that was nuts. That was absolutely nuts. But some people made a lot of money shorting that stock today. So congrats to them. Congrats to you if you were in on it. Now, when it comes to earnings, you'll have Jabil in the morning. Costco and Lennar, the home builder, is going to be in the afternoon. So be watching those two. And then there will be data, right? You're going to have all your continuous jobless claims, initial jobless claims, retail sales, all that fun stuff coming out. And that will be pre-market right there. And then after the market opens up, again, we got a lot of bill auctions, which should not be a problem at 11:30. And that's about it until Friday. And so tomorrow we'll get to see, you know, is it going to be more profit taken? Or are we going to come back down, try to grab some liquidity before trying to make that push to all-time highs? And normally, when you get up in this area, you know, you start seeing resistance, obviously, when you get to all-time highs. So you might see a pullback and a push down, right? We've seen it from the individual stocks and everything. And so we'll see if that happens, because right now what's happening is your Mag 7, they're somewhat participating, right? But it's the other stocks who don't have as much weight trying to pull things up. So that's why you've kind of seen this slow move up to all-time highs at this point in time, because the Mag 7 hadn't been going crazy. Remember, they make up the majority of it, like 45% on the Qs. And so, you know, kind of keep that in mind. And, you know, again, though, it's good to see rotation, right? This is the thing we've been talking about. It's good to see it still happening, right? And so, you know, the window dressing will continue to kick in. There will be profit taken. So if you see dips and stuff, don't be surprised. As we talk about, just watch to see if the dips keep getting bought up. That's the key. They keep getting bought up. We're still in strong seasonality. The market got what it wanted, right? Fed pause. Maybe they cut next year, and they're kind of telling you that. That's not a bearish thing, all right? I know people say when they start cutting, it's not good, but that's, you know, you still got 3, 4, 5 months from there, right? And the market can run up so much. And even if they start cutting, and even Fed Powell, you talk about there could be a recession next year. And if there is, if the market all of a sudden goes from here to here and then comes back down to here, it's like, well, you bought here, didn't you? I mean, it could happen, but that's months down the line. So don't like try to stress yourself out about it, right? Just enjoy the green. And, you know, please, before you buy anything, always have a plan going in. So that way you don't have to look at somebody when you get a day like today and ask, should I take profits or not? You know, I mean, and I always say, does anybody complain about making money? I mean, it's not like you had to go in a coal mine, dig for coal or anything. You literally hit some buttons and bought some options, or you bought the stock. You know what I'm saying? So it's not like you really worked hard for it. And so whether you made a 500, 1,000, or 2,000, yeah, it could keep going, right? Maybe it does. But you made money, celebrate it. It's not a bad thing, okay? And if you hold on to it and it ends up going red, you know, whose fault is that? So just kind of keep that in mind, all right? So it was a good day and everything, and so we'll see what happens tomorrow. Please hit that like and subscribe button if you got anything out of it, and I look forward to seeing you guys tomorrow.